Good morning. Good morning, everyone. Welcome. We're just going to get started in a second, but I wanted to introduce myself. I'm Conrad Kiechel. I'm Managing Director at the Milken Institute, and I'm very pleased to be able to introduce this session, which is really one of more kind of fun and offbeat sessions that we do at Global Conference. This is Dave, I think the eighth year?
Eighth year
That the Milken Institute has had the privilege of being one of the sponsors of the Morgan Stanley Kellogg Sustainable Investing Challenge.
Yep.
And Dave Chen is going to take you through, we have the winning team here, and Dave is going to take you through a little bit about what the challenge is, how it's conducted, how the team is selected. It's really neat. Every year, a young group of people or a group of young people come and join us, and it's really remarkable, the achievements that these people have done already to be able to get here, and from people from past years, the journeys that they've taken, both when they got to Milken Conference and when they've left us since then. So we're just really pleased and wanted to thank Dave and the others for joining us, and I'll turn it over now to Dave Chen.
Thank you. Well, welcome. And this is, as Conrad said, this is the 8th year that we've been honored to be able to work with the Milken and be here at the Global Conference. This is a conversation really about two topics. One is specifically the Kellogg Morgan Stanley Sustainable Investing Challenge, but on a broader basis, it's really about what's happening with the issues or the topic of impact investing and sustainable finance at our business schools, and what's happening with business school education, and what's fundamentally evolved over the last 8 years in terms of the training of effectively the next generation of our investment professionals. So just a few things to just calibrate this. The Sustainable Investing Challenge was started 8 years ago, and it was with a very, very simple notion of challenging the finance student in our graduate business schools, and oftentimes graduate policy schools and law schools. Students would oftentimes compete as well, and that was to come up with financial instruments that and investment strategies, the use of capital markets that could have a positive, beneficial impact on our society and our environment. So it asked the very fundamental question: if finance is a form of innovation, can it be an innovative capacity to create impact? And we've been just incredibly pleased and surprised every year by the creativity, innovation, and commitment and passion of the students. If I could just have the next slide. This year, the statistics are that we had about 34 countries that were the targets of these proposals. We had well over 100 proposals submitted, 65 business schools from 20 countries. So truly, we're tapping into a global set of student intellect and passion at this point. And well over 300 students were engaged in submitting these proposals. Next. And I'm not going to go through these, but this is a sample of the 100 teams were winnowed down to 12 teams. And you can just see from the logos of the schools, the dispersal across the world in every continent of incredible ideas that came out of that. And today we'll have the winning team with us talk about this, but I'll just highlight a couple of the creativity points. Every year we seem to have no pun intended, a wave of ideas that oftentimes center around themes. A few years ago, a lot of the projects were about addressing the issues of agriculture and its various incarnations and sustainable ag. This year we had a lot that centered on climate change, and very specifically coastal threats around climate change. And perhaps one of the more innovative ideas that came out of this year was the idea of an insurance risk debt swap that a set of students proposed. And today we have another idea that came out also about coastal that was the winning team. And with that, I'm just going to turn it over. And we'll go to the next slide and the next one. One thing I will mention is that before I turn it over, and that is that the competition has also surprised us in a way. And that is, I'm just showing you a series of the winners of the competition from 2014, 2015, and to today. And I just want to highlight that one of the things that I think has surprised us is the fact that the student teams and their proposals are not just project ideas. Several of these teams have actually gone on to implement them. And so I'll highlight in 2014, Fresh Coast Capital innovated a fund strategy around urban decayed lands, specifically in the U.S., the upper northern cities, the industrial cities like Cleveland and Detroit, where there are now literally square miles of abandoned lands. They proposed a land development strategy that would in fact bring those back to useful life and to useful economic productive use and generate double-digit IRRs. I'm really happy to say that the Fresh Coast team today is actively engaged in 3 projects in the upper Midwest and across the Rust Belt, and have a number of other cities that are now in their pipeline of projects. And so literally they're now working on just about $100 million worth of projects exactly along the lines, with a bunch of bobs and weaves and learning in real life. But it's taken them 3-4 years to get up to speed on their idea. The Blue Forest team created an incredibly innovative environmental impact bond, addressing the Sierras and the forest fires that were taking place there. Again, a very innovative idea. They're getting ready to launch their first bond. And I believe it's a $25 or a $50 million bond structure that they're getting ready to announce after 3 years of working on it. Terra Firma was working on the intersection of landmines in Africa from the various civil wars and conflicts, and bringing that land back into productive agricultural use. Again, doing that using the capital markets, using the profit motivation, and using a mainstream capital as a way of addressing that. So these ideas have all taken off in one way or another. And so with that, I'm going to turn this over then to the winners of the 2018 Kellogg Morgan Stanley Sustainable Investing Challenge. And that's the team from Singapore Management University, SMU. And I'm going to ask them to start by just introducing themselves, maybe telling a little bit about themselves, and then literally running through the 10-minute presentation that they used to win the competition. And then we'll open it up for Q&A, and we'll talk a little bit about both the topics of the competition itself, but again, more broadly, what's happening in our educational system to bring out the next generation of investment professionals. With that.
Okay, well, thank you very much, Dave, for that rather inspiring introduction. I'm Felicia from Singapore, and my background is in geophysics. I started off as a research scientist, got very deep into the nuts and bolts of predicting climate, predicting hazards, but always thinking, is there a way to make our science more actionable? How do we ensure that all these complicated things that we're doing translate into action on the ground, helping people? So I was really glad for this opportunity to take part in this Sustainable Investing Challenge, because it showed us a clear way to cooperate with people with various expertise areas and bring it to the ground, essentially. So maybe
okay. Hey guys, I'm TK. From Singapore as well. So my background is in finance mainly, and a bit of entrepreneurship. So I used to be a corporate banker with some of the local banks. And one of the big parts that I realized when I assess credit, assess companies, is that there's a big element coming up within Asia, ESG. It's a bit behind the rest of the world, but at least it's coming now. And I always thought that actually more can be done, right? When I look at it, like when I look at companies, look at the CSR activities, I always thought that private capital can do a lot more than just this. So by nature, also because of my entrepreneurship background, I like solving problems, right? So when this challenge came up, it was a very good opportunity to bridge my skill set plus my interest and passion, and that's why I took part in this. Yeah.
All right, thanks for the opportunity. It's really great for sharing the ideas. So my name is Maoying. I'm currently an MBA student from Singapore Management University as well. But before that, I did my engineering degree in Singapore. Then I became a project manager in this area. So for me to join this challenge is really about personal motivation. My family has experienced a very big disaster, a big earthquake, in which a lot of houses collapsed, a lot of people died. So I'm really keen to offer what I have in this area to support sustainable development in the region.
With that, why don't you go ahead and start kicking it off? What did you guys work on?
Right. So the concept behind our winning idea is to create an ASEAN Storm Resilience Fund. ASEAN stands for the Association of Southeast Asian Nations. So it's a grouping of 10 member states. And maybe we'll just talk through. The idea is to use this fund to uplift farmers out of poverty because they're hit by this vicious cycle of disaster events, very, very strong tropical storms. And of course, that's only going to get worse with climate change on the horizon. So maybe we will go to the next slide, please. And the next slide after that. Okay, so it turns out that Southeast Asia is one of the most climate vulnerable areas in the world. And 4 out of 10 of the most susceptible to climate change are in Southeast Asia. So that would include Thailand, Vietnam, Myanmar, and the Philippines. 30 typhoons hit Southeast Asia on average every year, of which 20 make landfall in the Philippines. And yes, and this is only going to increase. So we anticipate 14% increase in intensity and magnitude. And if you look at the population of Southeast Asia, it's a very large population, 640 million, of which slightly under half are still in very vulnerable rural areas or small townships. Now, the interesting thing is we hear about urbanization all the time. And even with that happening rapidly in Southeast Asia, it's projected that around 350 million will still remain in rural areas over the next 50 years. The other interesting thing is the profile of farming households. It turns out that these are very persistent in Southeast Asia for both cultural and geographic regions. So we don't anticipate that sort of smallholder farming population to shrink. So this issue needs to be addressed. 350,000 have been killed in natural disasters over a 10-year period in Southeast Asia. And if you look at the impact in terms of monetary losses, there's 2 billion in direct impact alone. Next slide, please. Yes. So we talked about direct impact, but if you talk about indirect losses, the cost of providing aid, sustaining livelihoods after an event has happened, then it hits $5 billion. But this doesn't yet include the loss to GDP, the kind of curtailing of economic growth in what should be a very high growth region. And we recognized very early on that emergency relief will never be enough to stem this issue. We looked at 2 events, very, very devastating events. One was Typhoon Haiyan, which hit the Philippines, also known as Yolanda in 2013. And the other one, which hit in 2008, hit Myanmar, and that was Cyclone Nargis. And hundreds of thousands of people died. And if you just look at the emergency relief aid that poured in, it was never enough to cover all the needs. So the idea is to go upstream and look at it preventatively. And the way we want to address this is through what is the most fundamental thing to a smallholder household. It's basically to prevent their house from collapsing. Next slide, please. If you can prevent a house from collapsing, you're doing a couple of things. You're ensuring that the family inside is not exposed to the elements. And so many deaths and sanitation issues arose from houses just not standing up anymore in the force of the wind. The other thing is you're also protecting their livelihood to some extent, because many of these farmers have their food stores and seed stores within their households. And when that collapses, it's damaged by the rain and the wind and the flooding, then they can't restart their livelihoods. They will drift to the cities, settling in slums, or creating even a climate refugeeism issue. There's been a lot of talk of climate refugeeism as a sort of far-off fact, but we already saw this in the Cyclone Nargis event when Myanmar farmers could no longer farm, and therefore they were flooding into Thailand, etc. Okay. So one of the key concepts is to make sure that the house is reinforced to stand the majority of cyclone events, and that means being able to withstand up to about 200-mile-per-hour winds. And with that, I've just given you an overview of the ethos and the objectives. Maybe TK can tell us about the financial mechanism.
Okay, cool. Next slide, please. Yeah. So basically, to shrink the needs, what we plan to do is to offer below market rate microfinance loans to enable the local people to help themselves reinforce their homes, as well as work with the local cooperatives on the ground to help facilitate with many of the necessary processes. So as a summary, what we plan to do is to raise funds from private investors, make it available as microfinance loans for home reinforcement specifically. Then at the same time, we will actually source for grants from some of the multilateral organizations to help lower the cost of said reinforcements. So here co-ops will actually play quite a critical role. They will actually educate the local populace on the importance of climate adaptation. They will help with the processing of the loan and reinforcement applications, as well as help the fund itself collect repayments from the borrowers. So to improve the risk return profile, because the microfinance loans are actually made at below market rates, and also to align the investor interest to social impact, we have incorporated a development impact bond that will pay out the dollar amount on a per home reinforced basis. So this dollar amount is actually determined by factors such as the difference between the market interest rates as well as the rates that we charge to the homeowners, as well as the number of homes reinforced. Next slide, please. So we believe that this approach can have a lot of value add for the different stakeholders involved. So for investors, we expect healthy returns of about 11 to 17%, as well as a social impact that can be achieved. For communities, there will be greater resilience to typhoons and storms, as well as other climate extremes. For governments and multilateral organizations, as shared by Felicia, there will be huge cost savings involved. Also, they are able to better use their limited resources effectively, because essentially now they sort of transfer the risk of reinforcing these homes to the private sector, because payments from the development impact bond are only made when impact objectives have been met. Next slide, please. So such a project would naturally have various risks and issues, so we have tried to mitigate the major ones. So for commercial risks, we went down to speak to some of the different co-ops, and we have actually gotten quite good feedback from them. So this actually told us that there should be quite healthy demand, because when we spoke to them, it's not just about this idea that we float down to them, but they also tried to feedback on other resilience measures that we could potentially consider and include. For credit risk, we have proposed to use a group lending model that introduces social pressures into the lending model so as to encourage the repayment from the local people. For the feasibility of the development impact bond and grants, we spoke to the Global Environmental Facility, GEF, one of the multilateral organizations that could potentially issue such a development impact bond. They advised that the key criteria here is actually financial viability as well as social impact. So we thought about this, we discussed a little bit more, and we think that the ASEAN Storm Resilience Fund ranks quite well on this criteria because of the huge cost savings on the government's end, as well as climate resilience being a focus in recent years. For the operational related risk as well as feasibility, we have come up with a governance framework that allows for the different stakeholders to watch each other, so as to minimize the risk of mismanagement of funds. Also, the co-ops, because they are very, very crucial in this structure, is that we spoke to them and they are very willing to come on board with our proposed framework. So, next slide, please. With that, let me share some of the key assumptions that we made and base case results. So, with us capturing only 80% of our targeted demand, microfinance loans being made at 15%, which is about half of what the market rate is currently charging at the minimum, a loan loss rate of about 6%, and an annual development impact bond payment of about 1.2 million, which covers about over a 4-year period, about 39 to 40,000 homes. The fund will start returning investors' capital from year 3 onwards, and will return an IRR of about 14 to 15%, thereabouts. So with that, let me pass on to Maoying to talk more about the execution roadmap as well as the scalability of the idea.
And next slide, please. Thanks, TK. Sure, so it's very interesting that we did a little bit of research to understand ASEAN's framework. So there are currently existing framework mechanism to promote the sharing of best practice in ASEAN. And we do see great opportunity to proliferate the funds and to scale. So for the first phase, we really want to look into Luzon, the region, which is the second largest island in Philippines, covering 10 million rural population, and we target to reinforce 48,000 houses. So by estimation, it's about 3%. We estimate the demand ratio very conservatively, only 3%. Then the second phase, we want to look into Visayan and Luzon. Sorry, the first phase was Mindanao. The second phase is Luzon and Visayan. Then we are looking at 33 million rural population, and we target to reinforce 1 million houses. And there are a lot of similarity between the rice cropping region in Philippines and also the rice cropping region in Northern ASEAN, covering the country. You'll see Thailand, Vietnam, Myanmar, and Laos, those areas. So we really want to scale up to this region as well. That's the second phase. Then the third phase will for the third phase, we'll cover the North ASEAN, including those countries at the top. Then we want to address about 300 million rural population overall, and we target to reinforce 10 million houses in this region. Can you go to the next slide, please? Thank you. Yes, we do have our execution roadmap. So for the first year, we want to target for organizational setup. We want to form a program office in the first year, which is really responsible for coordinating among different co-ops and responsible for KPI tracking and dispersing the funds directly to the contractors. And for us, we want to focus on the administrative tasks like applying for grants, finalizing the details of the DIBs together with Jeff and the partners. And also we want to go down the field to build partnership with the co-ops to understand more about the contractors. And for the second year, the contractors will be invited for bidding. Then their capability will be estimated, will be evaluated by program office and by engineer without border, our partner. Hence, the operation will start from the second year. For the third year, we'll try to compile the learning points and the best practice. And at the end of year 6, the whole pilot phase will be evaluated and prepared to scale. So but at that point, we need a more detailed, of course, more dedicated execution roadmap. So this is the current plan of our execution roadmap. Could you go to the next slide, please? Yeah, that's our advisors during our research. And this is almost end of the presentation, and we welcome your comments and questions.
Thank you, thank you. And again, we want to congratulate the SMU team for a great job. And I think you can sort of abstract from this the 100 teams that participated in the Kellogg Morgan Stanley Sustainable Investment Challenge, the sort of the caliber and the passion that's sitting inside of our graduate schools. When we've done this in the past, I think one of the comments that we get a lot from folks in the audience is, this never happened when I was in graduate school, and we never had this opportunity. And I think it just speaks to the sophistication that we're starting to see here in this area. When we started this partnership with the Milken 8 years ago, I would say that the idea of using capital markets and the investment vehicle as an agent of change, the creation of these impact instruments, frankly, was largely aspirational. And I don't know how many of you sat through the Paul Ryan interview this morning, but 8 years later, we have the Speaker of the House of the United States on stage, and twice he talks about impact opportunity zones and the social impact bond as examples of bringing capital and private markets to our social and environmental challenges. So we've come a long way, and we're really grateful for you and your peers' commitment to this. I'm going to kick off with a couple of questions, and one of those is what motivated you to actually do this and to get engaged with the competition? And then I'm going to ask you maybe a little bit to comment on the peers, the other students from the other schools that you got to meet with and interact with during the competition, and what did you find was motivating them? And so start with yourself, but help us understand a little bit about what you're seeing in the peer group in other business schools.
Yeah, so if we talk a little bit about the kind of environment and the ethos of the competition, which we were really privileged to be a part of, I think what impressed us was the authenticity as well as the analytical skill that students brought into it. There was such a breadth of proposals. Some of the students brought their own life experience or the experiences of their families and friends into it. You had proposals spanning everything from creating jobs in the US for sort of economically more stagnant zones, to even kind of uplifting sex workers in India out of poverty, things that covered health, environment, coastal resilience. And throughout this was just this intent to do good, and we made friends at the challenge that I think we will find very useful to kind of bring forward our ideas, singly and as a group.
Okay. So I mean, since she really touched about most of the other ideas, what I would say is, from the other peer group is more of sharing with difference in culture. So it's quite an international competition. So that was definitely something that we picked up. Also, what we learned from them a lot is the different nuances between the different countries, right? Like, what are the key social problems that the young in those countries actually start looking at? Like, for example, in the US, it seemed quite apparent that people were very concerned about productivity gains and small businesses. In India, it was more about healthcare. It was more about uplifting people from poverty, right? So that's the second thing. And so again, for ourselves, what really motivated me, myself again, is this was a big problem storms and typhoons is a big problem in the ASEAN region. So I enjoyed problem solving, saw this opportunity, and that's why it came in together with both Felicia and Maoying.
I agree with TK. It's not really about this project, this competition. We do make friends with our peers who are in the competition, and we do share future career opportunities in sustainable investment. And I met some who are currently in venture capital, specialized in social entrepreneur. So I feel myself very interested in that as well. So it's really like sharing, not only limited to this competition. And also we do get a lot of comments from our peers. For example, they talk about a crowdsourcing platform that can be maybe flexibility, another alternative to our solution. Those kind of comments are very interesting. So it's really a great learning opportunity for me. Thanks.
So I sometimes joke that a few 20-year-olds can gather around a garage, get a dog, and in 4 months they can hack together an Apple app and get in business as a startup. But it's really unusual for three folks to come out of graduate school and try to create a fund. And straight out, it's a tough industry, it's a competitive industry, it's a sophisticated industry. I'm sure there's many investment professionals here in this room. And so I just toss it back to you. What did you learn out of this process about, hey, let's do a startup fund?
Oh, where to start? I think we talked a little bit about authenticity and drawing on many experiences. And I think apart from the mechanics of the fund and the business aspect, the common theme throughout is you need the wisdom of people on the ground. When you're tackling a very focused area, so in our case it's sort of the ASEAN thing, you need to go hand in hand with people who understand intimately what's happening and how to solve the problem, and to suggest and to take those suggestions with some humility. So we mentioned cooperatives, and there's an analogous organizational partner for all of the projects that were in the Sustainable Investing Challenge. But for us, it was cooperatives, because they have this trust system with the people that they serve. They are of the people that they serve. And if they have the same passion and willingness to get into the project as you do, you can deploy that wisdom and that knowledge.
Okay. So similar to what Felicia said, but let me add on to that. I think impact investing in general is quite new. It's not really something that we talk about a lot, especially in grad school at this point in time, at least in Asia. So I think when Dave teaches, he does teach that. Yeah, but so this was really a new area for me. I think for all of us actually. Yes. So new instruments like the social impact bond, how it works, what it does, what kind of benefits it brings to the communities as well as to the governments and multilateral organizations. This is something really new. And also, I think learning experience-wise, how to start up a fund, it's similar, I guess, a little bit to my own past entrepreneurship experience. A lot of groundwork has to be put in, a lot of due diligence has to be put in. And again, with what Felicia was saying just now, for our idea specifically, we had to do a lot of due diligence with the different cooperatives, with the different NGOs, and that was quite an eye-opener. Yeah.
Actually, we were discussing this yesterday during dinner time. So we feel this is too new in Asia so far. It's very difficult to find a career opportunity there yet. At least we try. So we really want to be the pioneer to drive this area, at least to do a little bit influence, may not be very huge, but to see some changes, some impact in the region. And then we want to gradually pick this up by at least talking to different people in Asia, those institutional investors, to let them understand what's happening there and how our fund is helping them. So that may be the first step. And also for my personal learning experience is really to understand how to operate a fund as an entrepreneur, to start that, and where should be the next step for us. For example, we were talking about whether we should go down to the field to know more cooperatives, to understand how they are working with the farmers, whether we should engage more engineering capability to support the co-ops to help them boost up their capability as well. Those kind of detailed stuff. This is what I learned.
That's great. That's great. Thank you. Let me open it up for questions and along multiple lines, please.
Good morning. I'm Annie Donovan. I run the CDFI fund at the Department of Treasury here domestically. And congratulations. Sounds like a fabulous project. I have 3 questions actually, but I'll only ask one. And if there are less...
Go ahead.
Okay. All right. So the first question is about the capital stack in your fund. So I was trying to discern between what was private investment versus whether the development impact bonds are actually what form they come into the fund. Is there any grant money in there? Like, what allows you to blend the rate down so that your investor, private sector investor, gets a market rate of return and the end borrower gets an affordable product? So that was one question. The other question was whether or not the product itself is building resilience and how it's building resilience versus just reacting. So are we making this housing and businesses more viable before a tragedy? And then I just wanted to understand just a little bit more about the cooperatives. You know, we have cooperative networks here, and they take different forms: farmer cooperatives, producer cooperatives, credit unions, which are financial cooperatives. Just wanted to get a sense of the strength of those as institutions and what do they focus on, farming or, and that's all.
Shall I take the first, then you take the rest?
Yeah,
Okay, so for your first question, right, in terms of how do we get to blend the rate down, grants involved? The answer to that is yes, there are definitely grants involved because we try to source for grants to lower the cost of the end product. So in our model assumptions, what we assumed is the reinforcement cost of one home is about $1,000 USD, and of which 10% will be financed by grants, right? Which is, from our understanding, is quite a low amount. Thereafter, what actually enables investors, or rather it allows the fund to actually give lower rates to the end borrowers, is that the development impact bond would actually pay out sort of the difference in terms of the interest earned for, if let's say we charge market rates and the rates we're currently charging. So for example, if the market rates are charging 30% and we're charging 15%, over the tenor of the loan, there will be an absolute amount difference in terms of the interest amount, right? So what happens is that DIB will pay this interest amount on a per home reinforced basis, but at the yes, they pay that to the fund, correct. But at the same time, because we want to align this with social impact even more, what we also said is that, for example, if we commit to target 1 million homes, right? But if we only hit 80% of the target, this absolute amount, the dollar amount, would be scaled down by a factor of, say, 80% to 80%. Yeah. So because of the additional inflow, we can actually charge lower rates. Yeah. So Felicia.
Okay, so on your question about resilience, and Maoying, do jump in because you're the engineering expert. So we're very keen on the idea that this is preventive and not after the fact. When you do it after the fact, you've not only got to pick up the pieces and build new homes, and what we were told by people who had lived through the Nargis event was that they were meant to build back better, but they never did because they were just trying to patch over the problem by that time, and they had, losses, deaths to deal with, sanitation issues to deal with. So the idea is to find, to select the locations quite carefully, places which are adjacent to areas that have already been hit, so that the local populations know keenly the importance of building ahead. And we reinforce the homes. We don't necessarily build new ones in a very modular way. We had some advice from Engineers Without Borders on how relatively simple the technology already exists. It's concrete, making sure the roof doesn't fly off, making sure the joints are very strong. That enables a house to withstand more than 90% of the likely typhoon scenarios. We have back-end calculations, but we won't bore you with those. But we looked at the climate scenarios, the projections, as well as the past 30 years of typhoon data. And that means that a house can be potentially withstand multiple events. So in the long run, you're saving a great deal for the local government, and as well as preserving the lives and livelihoods of people involved. Did you want to add to that before we go to the cooperatives question?
I just want to say, actually, such a project has been initiated by the Build Change, another international NGO in Metro Philippines, but they target on slum dwellers. And the engineering solution has been proved working, and also the market demand has been proved working. So maybe we can go and talk to them to understand more about the first-hand experience on the ground.
Yes.
Thank you for that question. And
sorry.
go ahead.
Third question.
May we take that one?
Yeah.
Or, the third question was on the nature of the cooperatives. Right, so interestingly, the cooperatives in the Philippines and other areas in ASEAN, yes, they also span a great range of different objectives and capacities. But the kind of cooperative we're looking for, which is quite common, is a farming cooperative or a fisheries cooperative that kind of initially starts off just trying to get a better deal for the products that the farmers produce. But they've also begun to do things like pool money to buy equipment, pool money to do soil sampling, and they're beginning to take advice, because we realize that both in anecdotes from actual people involved, as well as surveys and literature, farmers in Southeast Asia really know that climate change is happening. They see the effects, and they've already begun kind of asking around their communities, how can we do this? Yes. What they lack is the finance and the know-how to bring it all together. So we know the profile of that kind of cooperative exists. There's probably no strict terminology of it. They do a little bit of everything, but that's the profile we're going for. Yeah.
And again, to add on to that, right? These cooperatives have also, when we were initially doing our due diligence work, they also did some reverse inquiry, right, in terms of what other kind of resilience measures we can potentially start to finance. That's one thing. And also, again, part of climate resilience is not just about the infrastructure, it's also about the knowledge. And the cooperatives themselves have actually been going out to do that kind of education, which is why it explains that why the farmers are quite self-aware. And there's also cross-trainings between cooperatives. So even if, say, one cooperative is weaker, over time we expect the standards to start picking up and improve.
Yeah. Maybe I want to add a little bit. So in terms of selection base, Philippines itself has 30,000 co-ops registered. So I believe totally we can select those good co-ops who are committed, who are willing to really help the farmers to do things.
Thank you for that question, because I think what it does, and the answers that they just gave, I think give you a sense of what we're trying to actually do with this competition. The judging criteria for these teams is, number one, is it a creative solution? But is it, on the opposite, also doable? So creativity that's not doable doesn't rank high in this competition. So creative, doable. Second thing is does it have an aspect of scalability? We've seen over the last few years a number of great impact investing funds that oftentimes are very small and not scalable. And we don't want to confuse the issue of a pilot, which is what they're proposing, with if it works, could this actually sweep through coastal lines after coastal lines and literally millions of inhabitants? And then the third is how sound was the research, and did they make this a book exercise, or did they get out and get out into the problem domain and really understand what it really meant? And then the fourth was really the structure and the quality of the financials. It's a financial instrument. At the end of the day, the second word in impact investing is investing. And so did the math work? And does it sound like it could work? And so you can see from the kinds of answers, the depth that, and the SMU team did the best job, but they're just very much an example of the 100 teams and the kind of quality of thinking that's going on in our business schools these days. Next question. Paul.
Dave Chen. First of all, I want to congratulate Dave Chen on the continued extension of this. It's quite remarkable what you've accomplished. So I'm interested, one of you mentioned kind of the evolution of impact investing in Asia, and philanthropy, of course, is evolving in Asia as well, in very different ways than I think philanthropy has evolved in the West. So I'm interested in kind of what you see as the evolution of impact investing, social finance in Asia generally, how that interacts with philanthropy, which is again evolving in different ways and in a sense more slowly than what has existed in the West in the past, and what frameworks exist. In other words, just by way of example, when one talks about impact investing at SMU or NUS or wherever else one might be talking about impact investing, do you talk about the GIN framework, or is there some kind of evolving Asian framework that is somehow different? Something invented in Singapore and now being spread around the region. So that's my question. Thanks.
Okay. So to the first part of the question, right? I think impact investing is definitely picking up in Asia as more and more wealth is generated in Asia, as we know. Millennials are a big part, I think, of the push, and because we are more socially aware, because of all the information that's around, and perhaps also because of the position we're in, because of the past generation, I guess we are in a more comfortable space to be able to think about the other people that we can be helping, because we are more fortunate in that sense. But in terms of what you're asking, in terms of like frameworks and stuff like that, to be honest, we're not very sure, because again, impact investing wasn't really touched on in our local schools. And it's only through this competition where we first learned more about it. Yeah.
But if I can just add, I think anecdotally I've had two experiences with things that cross over from philanthropy into impact investing, and I think that's because it is still evolving, it's still rather nascent, and even Asia is a big place with lots of variation from China through to Southeast Asia to Singapore. One mini trend I've observed is CSR that kind of starts to evolve and mold itself into more formal impact investing. You see this with some of the sovereign wealth funds and larger companies, MNCs in Asia. It's kind of pulled through from those MNCs, and then the local companies begin to do that. There was a big haze event, transboundary haze event, that swept through kind of Indonesia, Malaysia, Singapore.
Explain what the haze is.
All right.
The haze.
The haze. I'm so sorry. So what happened was there were massive oil palm fires in 2015. It had been happening seasonally with El Nino for many decades, but it was particularly bad that year, probably because of unsustainable oil palm growing practices. But then what happened is, in the aftermath, you had lots of companies which you wouldn't have thought were related to the environment. People who, food companies that were frying their food in palm oil. They started going into CSR to first certify their products, and then saying maybe we should invest in the oil palm plantations themselves to make sure that those things are followed through. So that's one little mini trend. So it starts from pragmatism, goes from CSR, and the formal frameworks I think are not yet in place. The other mini trend is also with philanthropic organizations or families wanting to fund research. So they kind of go in saying, I was slightly involved with a research center, a science research center, which received a major donation from a family in Indonesia, and they wanted, what's going on with the world now? We want a good basis, in fact, before we start putting our money, to kind of back change. So these are some of the mini trends that we observe, but formal frameworks, I think, are still nascent.
I would say that, and Paul, again, thank you for all your great work here at the Milken, for the support of this and our next generation of investors. I would say that one of the activities that we've done, and by the way, I didn't actually properly introduce myself when we kicked off, so I apologize about that. Dave Chen, and my day job is I run Equilibrium, which is a sustainability-driven investment manager, and our unique twist on impact and sustainable finances that we really have serve institutional clients, so sovereign wealth funds and pension plans. And I also, I can't believe I'm doing this, I'm in my 9th year of teaching impact and sustainable finance at Kellogg. And so, I get to speak from both perches. And I think Paul knows this, but beginning last year, we started to convene a global network of professors and educators at the graduate school level that were teaching impact investing and sustainable finance. And I have to be honest, we were shocked that we found 130 classes around the world. And these were everywhere from the top universities, business schools that you think about, Wharton, Stanford, Kellogg, Columbia, Harvard, all the way through to, just a wide cut of the educational business school environment. And we convened about 50 professors last year in a conversation around the classroom. What are we doing to equip the next generation? And we're seeing an increase of momentum along that path. I would say that the center of activity was Europe and the U.S., and student activity is incredibly strong. The impact investing class at Wharton, for example, is now up to, I think, 4 sections of 60. The class at Harvard, I think, has something like 25% of the students are touching that class now. So this is clearly happening. But Asia is, I think, just starting to percolate on how does finance play a role here, and what is this thing? And I would just actually give props to SMU, because they're actually, I think, moving ahead most rapidly and actually putting together an endowed chair, a classroom, and a set of roadmaps around this. I think they've got an intent to actually work with, and you asked about frameworks, the Monetary Authority of Singapore, which is effectively their central bank. MAS has made impact investing and some of the related concepts like the benefit corporation increasingly a part of their policy discussions. The stock exchange of Singapore is requiring sustainability disclosure as part of listing and of the stocks. I don't know if you saw most recently, just within the last month, Olam, which is one of the big agricultural trading companies in Asia and actually globally, just launched a $500 million debt offering that pegged the cost of capital on their ESG rating. So the better the company, the lower the cost of capital. And it was completely taken and supported by a consortium of 15 banks. So we're starting to see the classic Asian mode that we've seen in other areas where maybe a little late, but then they leapfrog or they catch up and they accelerate. And I think we're actually potentially seeing some of that happening today. Other questions? Yeah.
By the way, Richard Matthew, I direct the Blum Center for Poverty Alleviation at the University of California, Irvine. And a big focus of our work is on modeling extreme events and developing solutions for low resource communities around the world. And one challenge that we have, and I'm wondering if you've thought about it, is because I love the way your approach brings together all these parts, it's very compelling. Can it accommodate new information? And cyclones are important because 200 miles per hour is much higher standard than we use in the U.S. anywhere. It's a very rigorous standard. But there's also some growing evidence that the new norm in Southeast Asia might be closer to 250 miles per hour. And there seems to be an inflection point where you have to move from securing roofs more aggressively, which would reduce most of the damage, as you point out, to building much heavier, stronger, reinforced foundations. And there's an enormous cost jump there. And I'm wondering, does this how would this system work if in the next 4 or 5 years it becomes clear that the threat is actually much higher?
So that's an excellent question. I think we definitely were very careful when we were talking about the probability of events happening. One of the advisors you might have noticed is the ASEAN Specialized Met Center, which was one of the leaders in doing the latest climate projections. I'm not sure if you're familiar with the term of downscaling. So there are lots of these global models that talk about climate change on a kind of macro level. But for the benefit of the rest of the audience, the idea is a lot of these lose resolution when you're talking about specific regions. So we were quite careful to try and incorporate some of that in this study, while also remaining wary that if you try to be too accurate, you might not take into account things which are very low probability but high impact. So in the underlying financial modeling, there's quite a lot of buffer that we build in. That's for the loss side. Then on the design specifications for the housing, 200 miles per hour is our current goal, which should cover over 90% of the likely events. But the idea is to work very closely with, to kind of marry information from the Met Center with the Engineers Without Borders to create that design. And we haven't done that in the greatest detail yet, but of course, should the fund be initiated, that is one of the first things that we should do. The other thing is timing, because obviously all projections are over various windows. And of course, the further out you go, the more uncertainty there is. So the idea is to have these houses which are meant to look at the next 20, 30 years minimum. But of course, there'll be natural refresh of that infrastructure which is required, in which case we would need to take the learning points, as Maoying said, in the execution plan, and see whether the next phase would have to be stronger, harden more, and maybe even some different design specifications. I hope that answers your question.
Can I put slide 5 up? That one, thank you. Just so I wanted, I'd be remiss if I didn't point out that the 2016 winner was actually from the Marshall School at USC. So close to home here. So I'd be remiss if I didn't ask you, I was surprised no one else asked you, what's next? Was this just a class project? Because you've got actually a heritage here of winners of this competition that actually went on to implement.
Okay, so currently what we have been doing actually is talking to various potential partners, both when we started engaging people, and some of them they started coming to us, congratulating us, and discussions sort of kicked off. So we are still in that exploration phase, because what we feel is that 3 of us, we're still students. To start, we understand to start a fund is not cheap as well, so capital is definitely required. So we are just really exploring what kind of resources are available before we make a final decision and take the lead.
Yeah, I think partnerships is a very important part, because 3 people are not going to have the resources and even the know-how. And what we were very pleased to find out was, in the course of researching this, we came across many partners who in fact had that will and that knowledge to help us along. And we're kind of massing our sort of resources and our networks right now to try and take this forward. I think the estimate to kind of get this off the ground was 2-3 years, and I think with a starting capital potentially $1.5 million, you would be able to kind of nail down some of the parameters that you need, make sure that you cover a breadth of uncertainty before following through.
But I want to say, definitely we don't treat it as a school project. We treat it very seriously.
Yeah.
One last question.
Thank you again, and congratulations. Well, I'd like to come back to the 15% IRR actually. I wanted to know how the people can afford to pay that. You alluded to it already. I mean, it's obviously cheaper than the 30%, which seems to be market practice, but it still seems to be very high. So I don't know if there was a currency hedging component there, which was here because you have to reward the currency risk. But it seems to me that we are more on the investing side than on the impact side if the people have to pay 15%. So I may be completely wrong, but I wanted you to give us perhaps a bit more thoughts around that.
Okay. So how we actually structured the microfinance loans, we know we call it microfinance, and typical connotations with microfinance is very high interest rates but very short tenors, right? So, but what we did here was to tweak it a little bit, because at the end of the day, we want to make sure that these houses are affordable to people and we want them to have access to the financing. So because it's an amortizing loan, what we did was we stretched the tenor to say 2 years, 3 years, which actually brought down the payments per month way down to say about $45 per month, right? Which when we did our own, we went on the ground and spoke to the co-ops, the general feedback was that is quite an acceptable level that people would be able to afford in the Philippines. Yeah. So hope that answers your question. Yeah, it's a very short answer, but yeah.
In terms of, because in terms of scalability, we understand there are variety in different countries in Southeast Asia, so the distribution will be like normal distribution. But currently in our financial model, we kind of take the average 320 as monthly income in Southeast Asia.
In Philippines, because that's the pilot. That's the pilot phase for now. But if we were to say scale to other countries and other regions, definitely the average income is going to move and shift. And that's where there's the flexibility of potentially extending and with playing off the tenor basically.
That will be the learning point for us as well.
Yeah.
There was an interesting story that I think we would like to share, and this was when talking to the co-ops, we wanted an indication of what was affordable to them. And the story that they came back to us with is we're willing to spend a certain amount, for example, on doing soil sampling tests. They do soil chemistry tests to see the fertility of their ground, and they of course have to pool resources to do this. But if they're willing to spend that much on basically improving and protecting their livelihood, it's quite a short stretch of the imagination to see how they could afford that kind of quantum to make themselves resilient to a devastating storm. So that's kind of how we know that it is an affordable amount. Yeah.
Well, I'd like to bring this to a close and just thank you and congratulate the team. And if any of you have a desire to one, help them, please introduce yourself. And two, if you're at all interested either in your graduate school that you went to and helping participate in this, I'd love to talk to you as well. So thank you so much.